Happy New Year, all. I want to go through how December wrapped up, but I want to also talk to you about where I see the market going, at least initially. Excuse me, if you've been listening to the headlines at all, you'll know inflation has been coming down, which means that mortgage rates will start to come down a little bit more as well. The 30-year mortgage rate dropping under 6%, according to a lot of really intelligent experts, is now a distinct possibility. And the gate, therefore, would be beginning to open for home buyers who actually got shut out of the market in October and November when the rates went above 7%. However, we still have an extreme housing shortage and not enough listings. I'm always preaching that real estate is local. And while inventory is shortage is pretty common nationwide, it's especially prevalent where we live. Our amount of inventory supply is significantly less than what people see on a national level on average. So we need to focus primarily, in my opinion, on pending home sales. And what those are, you may remember, is pending home sales are homes that have gone under contract but have not yet closed. And when you have a pending home sale statistic, it gives us a pretty good sense of what's happening in our market. Nationally, the pending home sales in December started to increase and therefore bumped up what had been seen for the past 6 months on a national level. Our pending home sales have stayed pretty consistent with no highs and no significant lows. So we're still staying in a pretty, what should I say, neutral market here in Kansas City Metro. But as we go forward, it's going to be important to look at those pending home sales because that's going to be a leading indicator, in my professional opinion, as to how our market's going to do. If we start to see pending home sales coming down significantly month after month, then we're starting to see a change in our market that may be, a concern with a few aspects. And those are things that we'll talk about should that occur. But right now, we're staying very consistent on in terms of number of contracts per month. We don't have as many as we did a year ago, certainly, but we also don't have an increasing amount of inventory on the market. So to wrap up all this crazy information that I've provided, I think it boils down to a couple of things. Mortgage rates, the normal, in my opinion, range is going to be between 5.5% and 6.5%. That's going to become the new norm for buyers and those in the market. It just is, in my professional opinion. Secondly, I think job growth is going to be even more important for local housing markets. That is to say, how many jobs, how many employers are seeking to bring in employees. We've seen a significant increase in people moving here from way out of state because of our affordability. And so I think Kansas City is going to continue to be kind of a go-to location for so many people. And that's going to continue to drive our local market. I think affordability is going to continue to be a challenge, but I think we're going to be more into what's a normal market where you don't feel so anxious to have to offer a significant amount of money over a list price. I do think that Kansas City will continue to see appreciation. We just won't see it as rapidly as we have. So that brings me back to one last thing. This sounds sales pitchy, but it's not meant to be. I truly believe that once the public at large has finally gotten the mindset that we're going to be going into more normal range interest rates, I think it's going to be challenging for buyers to not compete on properties again. I think more buyers will enter the market, but I think more buyers will come to the conclusion that they're going to have to pay interest rate higher than what we've experienced in the past couple of years. And that normalcy is going to start to factor in on a little bit more competition in the market. So if you're one of those buyers who's sitting on the sidelines waiting to see if those interest rates are going to drop, even if they do drop, that just means you're going to have a lot more competition going in through the market, particularly where we live, where our inventory levels are still dramatically low. So hope you found this helpful. We're going to take a look at how December ended up if you want to find out about that. Always reach out to me. Hope you're doing well, and take care. The December existing home sales stayed pretty much the same total number of homes sold as it did in November. So no significant changes there, but a pretty significant decrease from the same time last year, as you can see, down a little under 37%. The average list price, or excuse me, the average sales price in December stayed almost identical to what it was in November and still had an appreciation as compared to the same time last year. Existing home sale days on market has increased since last month and has steadily continued to increase. So back to what I've talked about in the past, we are going to see where it's taking longer for homes to go under contract and sell, but still not a significant major increase month after month. And then finally, you can see that the number of existing homes on the market in December was down from the previous month, interestingly enough, but up a little shy of 19% from the same time last year. So we're not seeing any significant highs or lows, but we are seeing a slight increase in inventory from what we experienced the same time last year, which goes back to what I talked about previously at the beginning. And that is when we start to see people having more of a mindset of normal interest rates of what we're currently experiencing, I think we'll see more buyers entering the marketplace. So any increase of inventory in our market is a welcome gift. So let me know if you have any questions, and we'll revisit again in February and see how the market started off for 2023.